One month you're making $6,000. The next month? Maybe $2,500. Welcome to freelance life. If you're a freelancer, gig worker, or independent contractor, you know exactly what I'm talking about. Some months are great. Others, you're watching every dollar. And traditional budgeting advice? It's built for people with a steady paycheck, not for you. The good news is, you can budget with variable income. You just need a system that's flexible. In this video, I'll show you exactly how, step by step. Here's the thing. Most budgeting advice assumes the same income arrives every month. But when your income jumps around, that doesn't work. Budgeting based on your average income is risky, because if you have a slow month, you're suddenly over budget. Budgeting based on your best month? That's even worse. The result? Financial stress, reactive decisions, and a constant feeling of not being in control. But there's a better way. A budget for variable income isn't about predicting the unpredictable. It's about creating a buffer and a method that turns chaos into stability. Step 1. Before you can build a budget, you need to know your real numbers. First, calculate your average monthly income. Look back at your income over the past 6 to 12 months. Add it all up and divide by the number of months. But here's the most important number, your income floor. What's the lowest amount you've earned in a month over the past year? That's the number you should use to plan your essential expenses. Second, calculate your baseline expenses. This is the minimum amount you need to survive and keep your business running. Include rent, utilities, groceries, insurance, software subscriptions, and taxes. Most freelancers underestimate this by 20 to 35%. So be honest with yourself. Pro tip: use a free spreadsheet or app like Mint or an app to track everything automatically. Step 2. Choose a budgeting method that works for variable income. Here are 3 approaches. Method 1, the average method. Use your average monthly income to plan your spending. When you earn more than average, save the surplus. When you earn less, dip into your savings. Method 2, the zero-based budget. Every dollar you earn gets assigned a job, bills, savings, goals, or fun. Your income and expenses should even out to zero at the end of the month. Method 3, the baseline method, my recommendation. Budget based on your lowest monthly income, not your average. This ensures your essential expenses are always covered. When you earn more than your baseline, allocate the surplus towards savings, investments, or discretionary spending. Which one should you choose? If you're new to freelancing, start with the baseline method. It's the safest and gives you the most peace of mind. Step 3, build a financial buffer. This is the single most important thing you can do as a freelancer. First, create an income holding account. This is a separate account where you deposit all your earnings. Then, you pay yourself a steady monthly salary from it. When you have a good month, the surplus stays in the account. When you have a lean month, you draw from it. Second, build an emergency fund. For freelancers, this is non-negotiable. Aim for 6 to 12 months of expenses. Start with 1 month of bare-bones expenses. Then build from there. Third, set aside money for taxes. Save 25 to 30% of every payment for taxes. Put it in a separate account and don't touch it until tax time. Pro tip: automate your savings. Set up automatic transfers from your main account to your emergency fund and tax account every time you get paid. Step 4, create a spending plan that flexes with your income. Start with your fixed expenses. These are non-negotiable: rent, utilities, insurance, minimum debt payments, and essential business costs. These get paid first, no matter what. Then prioritize your variable expenses. These are things you can adjust: groceries, transportation, entertainment. When you have a high income month, you can spend more. When you have a lean month, you cut back. Use spending ranges, not fixed amounts. For example, groceries, $300 to $400. Entertainment, $50 to $150. This gives you flexibility. If you earn less one month, you stay at the low end of your ranges. If you earn more, you can treat yourself. Pro tip: follow the 50-30-20 rule, but adapt it for variable income. 50% for needs, 30% for wants, 20% for savings and debt. You don't have to do this manually. Free tools like Inab, Mint, EveryDollar, and Stride can automate everything. And here are common mistakes to avoid. Mistake number 1: budgeting based on your best month. Use your lowest income to plan. Mistake number 2: not separating personal and business finances. Open a separate account. Mistake number 3: forgetting about taxes. Save 25 to 30% from every payment. Mistake number 4: not tracking expenses consistently. Track everything, even small purchases. Mistake number 5: giving up after one bad month. Stick with it. Every month you'll get better. Here's your action plan for today. 1. Calculate your average monthly income, look back 6 to 12 months. 2. Calculate your baseline expenses, be honest. Include everything. 3. Choose a budgeting method, I recommend the baseline method. 4. Open a separate savings account for your emergency fund and taxes. 5. Download a budgeting app, Inab, Mint, or EveryDollar. Do these 5 things, and you'll finally have a budget that works with your variable income, not against it. If this helped, hit that like button, it tells YouTube to show this to more freelancers who need it. Subscribe for more practical finance tips for gig workers, freelancers, and anyone with irregular income. Thanks for watching, now go take control of your freelance finances.